The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 13th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon, 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded up 137 points at 20,406. S&P is up 12, trading out at 2328. NDX 100 up 28 points, trading at 5255. NASDAQ Composite up 30 points. Russell's up 5. Semiconductors are up just a tad, 2 points. New York Stock Exchange is up. Gold is back $10, trading at 1225. Silver off 11 pennies at 1782. Light sweet crude down 94 cents, trading at 52.92. Leading the charge here to the upside, dollar-wise, it is Amazon. Trading up $13, about 1 6/10%. $840 is the number it's printing. Regeneron Pharmaceuticals up 11. Tesla is up 11. Sage Therapeutics up 15% or $750. You've got Acacia Communications up 9% or $5. To the downside, it is NVIDIA that's in the lead, $4.35, nearly 4% to the downside. Cynosure, maybe Cynosure, CYNO is the ticker symbol, down 7%. That's $4. Hain Celestial down 4. Knoll Inc. down 375. Ubiquity Networks off 3. So nothing really significant dollar-wise to the downside. So the requests are just simply coming in here. It had a private, interesting message here. I can't really completely read it to you here, but the request, and I like those. I like any, of course. Hey, I forgot to mention, if you can't call in, you can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. And I did get a ping out here. Said lost his tuchus, we can say that, shorting this market for the last 6 years and laughing out loud. Well, maybe we should go see, because there's a lot of jubilee out there. In fact, what I want to make sure that I always do is really correct the record. Now, that's, and the record being some of the stuff that I hear all the cheering and rah-rah, shishguba, or however that goes on CNBC with regard to the markets are, yes, they are at all-time highs. And I heard earlier, this comment coming from, I like some of these guys out there. In fact, there's nobody really that I dislike in the world out here, but I do dislike when misleading information is provided. And they were talking about how all these stocks were at all-time highs out there. Well, if that's the case, then answer me this, because you see, that's really not the case. Where the Sam heck are they getting that information? Now, we're going to take a look at the New York Stock Exchange, the NASDAQ Composite, and the Dow. Those are the only three symbols that I get. The number of stocks at new 52-week highs out here. And if we take, and the question is there any meaning behind it? Well, you tell me. Now, it's not a timing model, but boy, it sure does tell you about the underlying strength, or maybe not so strong out there. So if you've been shorting your you-know-what for a long period of time, and you're about ready to give up, maybe somebody like Steve here might say, hey, not so fast. Take a look at the Dow right now. The bottom panel on my chart is taking a look at the 52-week highs. So right now we have 6 of the 30 Dow stocks are at 52-week highs. More importantly, since the high that was formed out here, we'll call it right around the early part of December 12th, sometimes right around there, what we can see in the actual number of highs out there were 9. Now, we're just starting with the indice that really doesn't have, 30 stocks, and you might say the sample size is, come on. Well, actually, we're going to go to the larger size samples, but you're going to see the same consistent theme here. And this is where it does really matter. So you have a declining tops. And it can be resolved. It absolutely can be resolved. So that's why I say it's not a timing tool out here. But what I can tell you that the Dow is not doing, and this is what they did not tell you, was that it was making new all-time highs, in essence, higher than when the Dow, because they actually, I don't really think they know any better out there, and they're just really reading from a teleprompter. I got no teleprompter here. You are my teleprompter. And look, it does matter. What this doesn't tell us is the extent of a decline when that occurs out there, and that's why you and I have to use some other tools to try to identify when a market top is actually forming out here. Go back to July, middle of July 2016. You can see this declining tops pattern. And then the market went ahead and gave us a nice little retracement. And I do say little there. A little different story back here in May of 2015. So as the Dow was hitting its all-time high in May of 2015, there were only basically 2 of the 30 stocks that were making new 52-week highs out there. Now, that led to a fairly significant decline. That's not saying that's what led to the decline. What it's saying is that with regard to the hot potato and the party out here, be careful out there. And you'll see this consistently through the Dow, where you'll see price rising at the top, and you will see down below, you'll see declining tops line. Do new 52-week highs make a difference when you're making higher highs out there? And you know the answer to that. Look, that's just the Dow. So let's just say, let's throw that off to the side. You say, come on, 30 stocks out here, doesn't matter. Well, then let's go to an indice that's got 3,000 stocks. I don't have the exact number, but it's more than 3,000 stocks. And if we take a look at the NASDAQ composite right now, we can see this thing has been screaming to higher high ground. However, the last time that it really made a high that was of significance was back on, it looks like on December the 8th, and it was 557 stocks that were at new all-time highs. Today, the number, as of 1:13 p.m., the exact number is 272. In fact, when the NASDAQ composite on January 25th made a high out there with 56, 58 or so, there were 283 stocks. We are short by 11 as we speak right now. So this is a slight problem. Sometimes it's more than a slight problem. And if we take a look at what was also going on inside of the Dow back in July now of 2015, see, it was the Dow was May of 2015 when it had that divergent pattern. In the case of the NASDAQ composite, it was July of 2015, and price had no problem moving higher. However, when it comes to new all-time 52-week highs, it wasn't doing the same. There are problems. They can be resolved. But if they're not, you might gain back some more of that bottom that you lost during the last 6 years. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 144, S&P is up 13. So what we did during that first segment was we just simply got rid of the BS, all before Steve out there, that you're hearing in the news media. I'm assuming you're going to hear that same theme the rest of the day and make it in the newspapers and so on. So at least in this case here, you're educated. Now, as I indicated to you, you can't use that as a timing model. But you do need to know whether or not the rah-rah, shish-goo-bah, or however it goes out there is really a rah-rah. There are some problems. They can be resolved. Do I expect them to be resolved? No, I don't anticipate that they will. One of the other issues that is out here, and I heard these guys talking about it, and I just about crapped in my pants out there, not because the conversation was about the Russell 2000, and that the Russell 2000, was at all-time highs. And I mean, and the question was, why not just invest in Russell 2000? Now, you know that the Russell 2000 is up at its all-time highs. I wish I had I used to be able to get this data, and it's frustrating that I can't get it anymore. And I could give you all-time 52-week highs and so many different things, but that data source has unfortunately gone away. But that's neither here nor there. The question was, should we just simply back up the trucks and load in on the Russell 2000? Now, it's higher because the number one sector, as you already know, inside the Russell 2000 is what? It's the financial sector. Not just banks, the financial sector out there. And that's why the Russell 2000 is performing well. Or is it? Is the question out here. So I pose to you this. If you take a look at this chart, the top portion of this chart, as you know, is the Russell 2000 versus the Russell 1000, large caps versus small caps. Now, the market does better when the small caps are outperforming the large caps. Right now, today, it's actually ticked down. So as of 1:20 in the afternoon, you'll see just a little bit of a tick here where it's actually ticking down. The large caps are performing better than the small caps. That's really not a good thing for markets that want to cruise higher, especially the Russell 2000. Now, I'm not saying that it's not going to get to 1473 along the way. It will, maybe even another 100 points higher. I'm just saying not so fast. Now, even worse than that with regard to the Russell 2000 versus its, as I like to take a look at its strength meter out here. Its strength meter is making declining tops out here. Yes, we are back to, or it has made intraday a new all-time high. Basically a double topping-ish type pattern. It's been moving sideways out here. But with regard to the rah-rah and the cheer out here, not so fast. Now, not that this cannot be resolved out here, but what we really should be seeing when we are at all-time highs is this indicator up top should be leading. It, too, should be at new all-time highs, or at least should be taking out the highest high that it had back on December 9th. And we are right now testing that December 9th level out here. This is a non-confirming message. So I would say to all of those commentators out there that we're saying, gee, the Russell 2000 is making new all-time highs, to party, get out the hats out here. I would say come on into our Tiger's Den and take a look around. Has this made a difference in the past? Because that's really the all-important question out here. Well, we can see the last time that we had the same type of pattern was back out here in December of 2015, where we basically were making what some people may call a triple top out there, or some people may call it a triple Indy. I would prefer to call it a triple Indy out here. However, you don't really know if it's a triple top or a triple Indy until you bust through the swing point that was previously established out here, which would have been the busting through the November 16th swing point. Then you break through that, and then it says, okay, that was a triple top. But we already knew that it was the Russell 2000 versus 1000, that little ratio out here that was making a declining tops pattern. Has that mattered in the past? Well, I don't know. You tell me. Again, we cannot use this as a timing tool, but boy, it sure is heck. And you thought I was going to use a different word out there, but I caught myself. It sure is heck is significant when you get these type of diverging patterns, right? And that's what's in place right now. And what we have to play with, what we need is we need to know what cards are in our hand. So with regard to markets, and sometimes you think of me as Stevie the Bull, whatever his name is, and that's not the case. It is, for me, it's really all about the charts. And what do the charts say out here? What are the charts communication? I will be able to give you the other side of the case out here, the other side of the bullish case. But what I don't want people to do, and I want you to pass this around to all your friends and neighbors out there that get sucked into the misinformation that is thrown out here, that you yourself have taken a look at these charts, or go play the replay out here, and just know that these things must be resolved in order for there to be a party. Otherwise, it's a nasty hangover. And as Inspector Clouseau used to say, right? What did he say to Cato? I think it was Cato. Was that his name out there? He used to say, what? Right? When you least expect it, expect it. And right now, I can tell you from what I've seen out there, and in fact from really inside even the Tiger's Den, that this would be the least thing that people would expect out here. But what I'm sharing with you is information that it is not copacetic. I don't even know what copacetic means out there, but it's just simply not copacetic. It is not confirming what it is that we're seeing out here. Now, that is on the, are there some other things out here? The answer is yes. Hey, again, not a timing tool. Where would the timing come from? Where would be the signal? I would have to say, and it's going to be coming from the futures market out here. It's going to come from the ES Mini at this stage. I suggest that because price is moving higher, doing less relative energy. I have it as a seventh wave move. That's off of the election low out there when we were limit down. You know, that was in the 2020 range. Right now we're 23, 26, so we're 300 points higher. Heck of a move out here, but nonetheless, price moving higher, doing less relative energy. You need to see it close, not necessarily today. In fact, today that wouldn't even work, so to speak, but I would give it, and we're not going to likely get it. But 2306.98 would be the exact number. Not that it could trade to that number. That's just the mathematical calculation. But closing below 2306 is really what would be in order. I don't anticipate that that's going to happen today. There's really nothing out here other than apparently me, Stevie Downer, to to pour antifreeze on this move out here. Look, you just need to wait for the signal to come in. If that signal comes in, that's what's going to give you the best potential opportunity that you're about to see a market when you least expect it. Expect it. And now where I was thinking, hey, maybe this is just a 2-week retracement out here, I've made that bed. That bet has been made. It's been put off to the side. It is probably more like a 2-month move to the downside. And it'll be, you know who it'll be blamed on. It'll be blamed on Stevie out here. But you'll know different. It was really based on the fact that we couldn't get to new all-time highs and we couldn't get the Russell 2000 to outperform the 1000. I'm just suggesting don't get snookered. Do not, and I love playing the game of snooker for any of you guys who have done that on a pool table out there, or maybe even a game of golf on a pool table. That's a great game out there. And boy, does that take some skill. And it's been a long time since I've played a game of golf on a pool table. Okay, so and also, inside the Dow out here, what would be the requirement? This too, price moving higher, doing less relevant. And by the way, on Friday, you got a TD sequential count out there, TD 13. You'll see the blue 13 on my screen out here. That just requires a close below 2170 as we speak right now. So this is Steve Rhodes with TFNN for Tom. He wants to take a look at the Nugget. He wants to take a look at basically the miners. And the question is now the time to come on in with gold being down $11? Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 162. S&P is up 15 points right now. And so, Tom, let's try to go answer that question, or at least take a look at some of the factors that you and I should consider with regard to, hey, is now the time to step in on the mining sector? Let's first just take a look at the GDX, because its performance, for the most part, has been pretty substantially bullish as we speak today. What I mean by that is you've got 19 million shares. This is trading lower. Made a high out here with 41 million shares. So on Friday, there were 65 million shares. So we just simply have light volume. Now, here's the problem, Tom, with the candle associated with Friday. It's an inside bar. Now, in an inside bar, the actual message there, the Japanese message, is that the trend that it's coming from should continue. And in this case here, with regard to the GDX, we know that 2565 is a major significance resistance level. That's the red line going across my screen. Let's go ahead and turn that off. So that's the first thing. That's the first feather we want to go ahead and put in our cap out here. So let me turn that off. The second thing that we know is that when we take a look at market profiles, let's actually turn off the weekly out here, and then we'll turn it back on. What we're going to look at is the daily profile that just formed here over the past couple of trading sessions. And what we can see is that point of control, that's the center of the box, which is priced, Tom, at 25.26 versus the high of 25.71. It's much closer to the top of that box, the bottom being 24.13. This says that it is sellers that are really in control of the GDX for this price area here. So at this stage of the game, it would appear, and we're going to, it would appear that where the GDX is headed to is 24.13. Let's put those weekly profiles back up on the screen, though, because that could give us a different area of support, and it doesn't. So in an inside bar says the current trend continues. That would say to me you're really looking at probably 24.13. That's the first thing that I would put on my cap, 24.13. I would then say, well, you don't know where Stevie's red line, the oscillator unchanged line, is, but we're really not too far away from that. Let me switch over. Let me see if I can find a chart easily that I can do this on. Yeah. It's called the GDX chart. It's right here. So if we take a look at it, you can see that so far today, the low was nothing more than a test of that oscillator and change line. Price oscillator down here, you can see it's still above zero. So that is bullish. But if that price gives way, and you're going to say, what is that price? It's 24.92 as we speak right now. And if we see it close below 24.92, then more likely than not, what we're going to see is a pullback into that 24.13 out there. And I know that pennies make a difference to you. Now, it's possible that the GDX will hold this level. It would be bullish for the GDX to test a level of support and hold it. And look, if it's a penny or two, a nickel, it's really hard to let it blow your skirt up, so to speak, out here. But use that as we've got a light volume pullback that's going on. And I'd rather, at this stage right now, have you wait for those lower targets, that 24.13 area. Now, the reason that I say I would rather you wait for that is because of this. And I don't know how this is going to unfold today. This is a 15-minute delay on the Japanese yen. But the problem is that it's up against a level of resistance. Actually, it's slightly above the level of resistance. In order to say, hey, you know what? The GDX has found support at Stevie's red line, which it may have. What you really need to see is you need to see the Japanese yen close below 113.70. We're trading at 113.81. Again, a 10-minute delay on here. And no, the GDX is not singing in the key of G, Bill. I've got it in wavy number 6 out here, with potentially wave number 7 to follow. But we're not there just yet. And I suspect it's really not in the 7th wave, Bill. And the reason that I suspect that is because of the XAU chart. So if you and I take a look at the XAU as an example, it formed its 7th wave move, its key of G right here. This was the day of February 2nd. And we have since recycled higher out here. So I'm suspecting that really we have a to B equals CD pattern. This may be not one of your simple ones, but Bill, I suggest that I'm not going to necessarily use that key of G, that 7th wave move inside of the GDX. There's too many other too many other things that suggest that that's not necessarily going to be a top out here, and that we're going to see a little bit more of a pullback. Now, with regard to the yen, if it closes, Tom, above this 111.67 today, then what I would suggest is that this is going to probably head to 115.71. And unfortunately, in our case here, that center of the box is pretty close to the center of the box. It's not telling us one way or another, which would then be the next logical level of resistance, though, that point of control. So you want to probably try to time things. Now, unfortunately, as you know, that because of the currency trade out here, this could happen at 3 o'clock in the morning. Everything is done, and then it starts backing off, and then you start seeing gold move to the upside out there. With regard to gold, the area that you want to pay attention to, and it's strong. I'm still in the trade. I just know that you're asking me from a day trader's type of perspective out here. I have not unloaded these trades here just yet. And I am waiting for, if I'm going to consider doing that, I need to see gold close underneath its TAS daily profile low. This also formed a couple of days ago, and that number is 12.18. The low so far today, 12.20.30. So support's holding. Unfortunately, this probably ends up being more of an overnight deal with regard to the yen out here. And so I'd say you've been sitting on a bunch of winning trades out here. I'd wait. I'd wait. And so that's my hopefully that at least lays out the reasons why you should consider waiting, or at least the factors that you should consider taking a look at out there. So I hope that helps you. Just going to check here just for email, see if anybody has sent in an email request to steve@tfnn.com. I don't see it, but that doesn't mean that it's not there, because I could have easily overlooked it. Okay, so what do we want to look at next out here? I think we've covered gold, silver. I've certainly covered the markets and what to be looking for there. Or I think the VIX index is suggesting to you and I that it knows something too, and that something is Dr. Clouseau. When you least expect it. No idea what it is. Oh, I know there was an email that came in. Asked me the question, why is UVXY down with the VIX index being up 32 cents? And it's really a great question. And the answer is because the UVXY does not trade off of the cash spot VIX index. It doesn't. If you go to, who is it? Is it Power Shares, I think, maybe, that vehicle, that ETN, exchange traded note, is managing that ETF out there. What you'll see is there's a tab where you can go to the holdings, and it'll show you which contracts are in there. If you trade the UVXY, just simply throw out the even looking at a VIX chart out there. It just isn't going to matter what the spot index is trading at. What matters are what the two futures contracts are trading at. And I believe that at this time here, I think I looked at it last week, Thursday, and it was like 90 or 95% of the March contract, which, by the way, the March contract inside of the VIX index is the one that's down the furthest percentage today. It's off 2.28%. That's why UVXY is down 6%. It's because of the February and March futures contract for the volatility index. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 160. S&P is up 15. And let's take, so there's a question that came in, Steve. Any chance of seeing evidence of market rotation in sectors? Sure. Absolutely, Bill. But I think we have a caller on the line. So let's go to that first. I think we've got John in Philly. John, are you there? Oh, we got Brent in California. I apologize. Brent, thanks for calling in. How are you doing today?
Doing great, Steve. How are you today?
Very, very good. So tell us, you should be our reporter with regard to what's the name of the city? Orville or something like that? Where the dam?
Not a good scene. I've been on that lake before years ago, water skiing.
Okay.
Very, very large reservoir, so it has the potential to be pretty catastrophic if it's not the dam itself. What it is, but I mean, it is kind of associated with it. They have the two spillways. There's the main spillway and then the emergency spillway that they use. Mm-hmm. They're both eroding, and so it is a problem because if they can't let water out and it keeps rising, then at some point, they're going to have a problem. So.
Now you're kind of like northeast of San Francisco. Northeast of San Francisco, not that far, something like that.
I'm more east of San Francisco, probably about maybe. It's about a 20-minute to 30-minute drive from my house.
Okay, so if things got really bad with regard to this dam, where does it impact as far as large populations? Does it get to anywhere near? Because I don't know where that river flows to.
It's further north, so it would probably be. It's been a while since I've been there. I think it's more like Redding, that kind of area. Excuse me.
Okay.
So up further north, I don't know if there's any huge.
Yeah.
I mean, there's definitely populated areas, nothing like the Bay Area, anything like that, or LA or anything. But it would impact a lot of people for sure.
Well, let's hope they get it patched up. Let's hope they get it patched up before the next rainstorm, which is I think in a couple of days, what have you. But
it's coming in, yeah. Mm-hmm.
Yeah. So what did you want to look at today?
I think we've looked at in the past CBI, Chicago Bridge and Iron. I'm long at 32. My question was, it looks like there's on the daily we're forming a potential AB equals CD up to around 36, and then on the weekly, it looks like there's a bigger one potentially. If it were to get through 36, it could go up to like in the lower 40s. So I just wanted you to take a look at that.
Yeah, no question. And, you have volume today of 964 going into that smaller A to B equals CD that you mentioned, which is the January 26th high, which was 3516, 1.4 million shares there. So it seems like, or it sounds like mathematically, it's similar-ish type of volume out here. What it's running into in a price level, just simply for you to watch for, is probably the 3475. That happens to be its TAS weekly profile. So you'd like to see it close above that for the week, obviously for the day out here. If you're coming in with stronger volume at the end of the day on that January 26th high, and then you take that out, that sets up a smaller A to B equals CD. But I'm with you. I think it's the larger one that you're perhaps taking a look at, which is the dealing with the swing point from December 13th. That too has 1.4 million shares. So the nice thing is you know what you're taking a look at volume-wise. And if it can take that out, then you've got a larger A to B equals CD to the upside. And that takes you back probably above the area where this thing had broken down. And the breakdown in Chicago Bridge, folks, was on the trading session of July 22nd, and that was about 5 million shares to the downside. So, if it takes out these highs one thing at a time, first is the 34.75 level, then is 36.56, and then you're going to be watching the 38-ish area, 38.44, so that it could go fulfill that move out there. But CBI, again, is the ticker symbol, folks, if you're looking at it. And, everything looks pretty positive to me. And I certainly, these nice, that nice breakaway from October 28th, that sign of strength was really nice out there. And now, you have a little bit of a consolidation that's going on in between this area where you're trading right now and probably down to 31.41 is the price area. So it looks, I don't see anything wrong with it. That's for sure.
Okay. You did mention the VIX, which I had noticed myself that it was up on a day when the market's up, decently. So that was a little bit of a heads up, I guess, or red flag, potentially.
You're right. And it was the same. So when I look at the VIX, I like to look at a couple of different ways, a couple of different tools. One of those that helps around market highs or an early warning signal, kind of like an early earthquake signal or something, is by looking at the actual closing price of the VIX. And so then you're just simply down to a line chart out here. And when you look at the closing price of the VIX, we can see that on Friday, it was a higher low, a higher closing low. And today, right now, we're still trading at a higher price than the area that I'm referencing is back on January 27th. So it's another indication that just got to be careful. It doesn't say right now it's not saying go short. The lack of new highs isn't saying go short. It is saying maybe you just should be very careful on the long positions out here. It's just it's like I don't know what the name of that game is where you stack up all these logs and you start pulling one out at a time and eventually get so unstable that the thing falls down. We've got some logs that have been pulled out here that are in the area that can create a lot of instability. We'll know inside the VIX, the next level to really pay attention to, Brent, would be 1204. Any close above the 50-day exponential moving average, and then that says that what I'm anticipating, which is a decline for at least 2, more likely I think 7 to 8 weeks, then it would be saying that would be unfolding. But we don't have that message right now just yet.
Okay. Yeah, there are some areas that are pretty strong today. That IPI is doing pretty well. It's up like almost 15%. It's that, Intrepid Potash. And so there's some of the fertilizer stocks are doing okay, and infrastructure stocks are doing okay. And, so there are groups that are, the market itself is doing okay, but there are little sectors that are kind of hanging tough. So, all right, Steve, I really appreciate it.
You bet.
You bet. Think good talk. Prayers for the people in Orville, and hopefully that'll all come out okay at the end.
Absolutely. Okay, Brent, have a nice afternoon. Let's go to John in Philly. John, thanks for calling. Thanks for holding. How are you doing today?
I'm doing very well. Before Brent called in, I was testing to see you were on your toes, thinking I was on the line, but not quite. So thanks for taking the call, Steve.
That was my Johnny Carson soothsayer. I was holding the envelope up to my head. and I got it wrong. But
Somebody's beckoning, yes. Say, Steve, actually this segues quite nicely with what Brent is looking at. I'm very interested in a couple of your perspectives on three names, but I'll rank them in priority. First is Rio Tinto, RIO. Second is Vale, the Brazilian mining company, VALE. And lastly is BHP. Specifically, Steve, what I'm interested in is if you can share the monthly charts.
Okay.
And throw up your AB to CD extension techniques to answer the question, how high is high on these?
All right. So, Johnny, stay on through this break here. We'll come back. We'll take a look at Rio Tinto, Vale, and BHP. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We're on the line with John in Philly. We're going to take a look at the 3 stocks here during the next 4 minutes. The first one is Rio Tinto. So, John, the one thing I notice on a monthly chart, which is what you had asked me to take a look at, was that this was a perfect bottom signal where price came all the way back to test the swing point from December 2008. That swing point had 146 million shares. It was tested and rejected with 111 million shares back in January 2016. Slight another rejection with 115 in the month of February, and since then we are off of the bottom. If we take a look at my little oscillator on change line, price is now above that. That tells us we have a rising price oscillator. It's probably not yet above zero, but that's still a bullish message out here. And you and I, we don't really look at this too often, but if I put on my TAS market profiles, the monthly market profiles, price is above that level, which is 37.73. And by the way, interestingly enough, when we were getting the rejection of that swing point back from December 2008, this set up a monthly profile where that point of control was close to the bottom of the box. That said, price was going to travel up to the 37.73. So now with price above that, says we've seen a change in trend, and the next stop out here is probably in the $59 area. Any questions there, or should we go on and take a look at BHP and Valley?
Yeah, let's. This one is just instructed to focus here. I'll re-ask the question. Let's open up our minds here and not limit ourselves as to what the possibilities might be, given your technical tools, your fib expansion techniques and assorted tools. How high can this thing go in a super bullish case, say the next 6 to 12 months?
Well, that 62-ish, 59-ish area, and then 75 would be. So if you're going to ask me that question, I would say 75 would be the area that it.
You're thinking retest of prior swing points. Is there would those numbers would there be other techniques, fib expansion techniques that would target similar sorts of areas? That's kind of what I'm asking. And Steve, the reason I'm asking this question, of course, all these names bottomed out December 15, January 16, and now they're moving higher. And what I've found historically, for me, a huge weakness is not finding a bottom. It's getting out too early and never having the moxie, the gumption, to ride something until its completion. And since these things are running like crazy and every couple of weeks they put on a new leg higher, I'm just asking this question of you with the objective of getting my mind acclimated to being able to envision something much, much higher.
So here's a tool that I would use to try to answer that question. And you're going to see 3 lines on my chart. The red one is our oscillator and change line. You and I take a look. I look at that all the time out here, just simply to help me understand what's going on between 2 moving averages, the 19 and the 39. The 19 and the 39-day moving averages are the blue and green lines that are on my chart out here. And we're looking again at a monthly chart, but it works this way on all time frames. When price dropped below the oscillator and change line, looks like back in September of 2014 or September 2012. I take that back. 2011. When price got below there, what happens is we can see where there was a convergence of a red line and that oscillator and change line. Price typically comes back into that area. When it comes back and it gets rejected, tells you price is going to continue lower. The next piece of information will be when these 3 numbers come together. When these 3 lines come together, when they do come together, price should pull back into them. If it pulls back into it and rejects it and moves higher, it's off to the races, probably to that 70 area. So I'm sorry we're out of time, but that's what I would be looking at next to try to catch the larger trend inside of Rio Tinto. All right, my friend?
Steve, thanks for the exercise. Bye now.
You bet. Take care, folks. Stay tuned for David White, and I'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.